Hello, 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 everyone. I have the pleasure today to be with Amrit, CEO and co-founder of hyperexponential, a company I've been following for quite a while now. So welcome, Amrit.
Hi, Sabine. Thanks for having me.
And just a little bit of an introduction about you, right? Qualified actuary, software expertise for over 12 years. You have an experience at Lloyd's of London. I started my career at Lloyd's, if you didn't know. I'm Red as well. And we are going to talk about insurance pricing for complex risk decisions. So let's get started. Let's just go into a bit of background, Amrit. Who are you? How you ended up in the Lloyd's market? And what got you to set up hyperexponential or HX now?
Yes, I think we should all call it hyperexponential. It sounds much better in a French accent, actually.
Merci.
So what would I say? I always make the same rubbish joke, which I'll make here, is that I was one of the few idiots who graduated at the time of the dot-com bubble bursting in software engineering and thought it would be a bad idea to be a software engineer. So there's a small number of people in the world who studied software engineering and didn't become an engineer. I'm one of them. Graduated as a software engineer, decided to do something else. Just like many people, found myself in insurance. I'm a huge maths nerd as well as a technology nerd. And I had some people I knew who said, well, why don't you consider being an actuary? You get to stretch your mathematical legs, you get to work in business, and you get to solve interesting problems with people. So like many people, fell into insurance that way. Thought I'd give being an actuary a go, found I loved it. Worked at a company called Catlin, one of the legendary businesses that is now part of the AXA group. Those people went on to found Convex, one of our early trusted flagship clients. So worked in insurance, had a wonderful career for the first 12 years. As you said, like I started my career there in the Lloyd's market. I ended up running the analytics team for Tokyo Marine Kiln. I built that from scratch. I was the first actuary who'd worked in the 50 plus year history of the Kiln syndicate. And then as Tokyo Marine, who owned that parent company, merged into a broader merged a couple of its entities, I became in charge of that. It got to that point where I was tasked with building a kind of modern pricing platform. And I thought to myself, well, it's the 21st century, the world's shifting to the cloud, open source technology is leading the way. You know, most people are using Python, R at the time, and other, open source technologies to build analytical tools. There must be a framework, a platform I can use to solve my job as an actuary. And much to my chagrin, I found that there was nothing. There were some tough software solutions out there at the time. They're still around. They weren't fit for the needs that we had. And so a very classic founder story. I was very frustrated. I banged my hand on the table. I said, someone's got to do something about it. Who better to give it a go, at least, than a software engineer turned actuary who's worked in the market for a long time. And so that's how HX was born.
Beautiful story. And, as you are speaking about some of the companies you work with, I have to say that as I started my career as well, Lloyd's of London, I was fortunate enough to have great mentors such as Bill Perroni or Paul Jardine at the time at Catlin. We actually, a small world, but I've been fortunate to have amazing mentors. And so I want to hear from you, when you think about our industry, which is insurance, what does insurance brings you as a founder of a company, a tech ventures, what energy insurance bring you, partly in commercial lines, right? Because when I think about hyperexponential specialty lines, I get small and medium enterprises as well. Tell us about the energy this amazing market brings to you.
Yeah, I love that question. That's a fantastic question. I've never been asked before. I have an easy answer for this, actually. I love insurance. I'm a huge insurance nerd. I think insurance is a societal pillar. There are no rockets launched. There are no large buildings built. There are no planes that take off without insurance. Without the mechanisms by which we can absorb risk, we can't take it. And when we take risks, we reap the rewards of those risks and society moves on. So I'm a huge insurance nerd. I think it's important. I tell everyone who joins HX, you need to learn to love insurance. come for the fun opportunities, stay for the insurance, right? Is what I would say. I think that insurance is one of these fascinating sectors that intersects technology, mathematics, and human judgment in a way, for people like me, in a way that's very unusual. You have people who are tasked with working out how risky something is, and if by definition, if it's perfectly predictable, it's not risky. And so you have to analyze that risk. You do that in a variety of different ways. You use tools to do that, use techniques to do that. And I think it's a wonderful place for people who love solving hard problems in a variety of different ways. The actuaries and underwriters have to huddle together around the underwriting decision that's made is the essence of the problem that we're trying to solve. But I think this intersection of making human-based judgments, combining it with interesting kind of mathematical, analytical problems, and using technology is actually insurance is one of the best places to combine those things. And it's a heady cocktail for me. Again, I'm a huge nerd in this space, but I think it's an awesome place to spend your time.
I really enjoyed my chat with Richard again recently. And
Yes.
We actually talked about, for sure, hyperexponential, but we decided to call the podcast The Pricing Nerds because you said, Sabine, we are nerds about insurance. We are nerds about pricing. I said, you know what? We found the title for this discussion. And so that, it's doing very well, over 3,000 downloads. But let's
Wonderful.
go into the decision intelligence. So decision intelligence is not a new concept. You won't believe. You can see, lines on my face, but I've been in the industry for quite a while. And I have a guest. I work with FICO, and my job there was all about decision intelligence. And so I would love for you to actually define what decision intelligence is for hyperexponential. And what does it mean when we actually talk about advanced pricing mechanism?
Yeah, it's a great question. And you're absolutely right. Decision intelligence, the essence of what it is, has been around for a really long time. I think it's really important to distinguish between a kind of decision intelligence as a mindset and a way of solving a problem, and then the technology side. And I think probably the area where HX has been very novel is in crafting a technology solution around actually the act of obtaining, if you will, or applying decision intelligence to the problems that you're solving. So that's probably where the novel aspect of HX comes. But for us, decision intelligence, it's a straightforward concept, which is where you go about the act of solving a pricing problem in such a way that you bring together the data, the insights and decisions together so that you're better equipped to make those decisions over time. Right. So every single time you do some work in the pricing as a pricing exercise or rating exercise where underwriters and actuaries work together to design and build the models and then to use them and to capture that data, actually just you set up a system such that the people who are doing that work automatically create a rich data asset that's coherent, that's evergreen, that's growing, and that data asset can be fed back to make better decisions next time. And one of the things that I saw over time, and people spend a huge amount of time and energy on technology. That's not new. That's happened for a really long time. But the technology didn't create this kind of virtuous feedback loop, right? Of the data, the insights, and the decisions over time growing. We would capture loads and loads of data. I remember this in the mid 2000s. I would watch as a software engineer, us capture all this data and then throw it away. Right, and never use it again. And it was hard, right? One of the things about our space that people often underestimate, I'm very fortunate to be the founder of a moderately to very successful enterprise technology estate company. But what that means is our clients have enterprise technology data landscapes. If you've got $100 billion balance sheet, like some of our clients do, you've got data sets that are far and wide over multiple countries, territories. Some are still stored in green screen, underneath green screen systems. Some are in modern databases like Snowflake. Some are stored in PDFs in email systems. Getting this data together, operationalizing it so it can be used to make a decision, and then setting that process up so that actually that data gets better over time is really hard. And that's where HX came really onto the scene, because we crafted the technology to actually take away all the boring act of kind of doing database manipulation, or building algorithm containers, of building web forms, to let our clients focus on the problems that they actually cared about. Building the algorithms, using the data to make better decisions, surfacing that to the underwriters at the point of transaction. And that's where I think we really started to add value in a way that had never been seen before.
And what I hear here is we are going for dynamic. So we are moving through a business model which is far more dynamic than static. And
Yes.
When we actually start looking at where the market is going, because of the complexity of the risk, we are starting underwriting. We need that dynamism. You won't believe, but I was just last week presenting at the Swiss InsurTech Hub in Zurich, and the enterprise application market is the largest one, which is still receiving investment, 1.6 trillion investment to date. And when you start looking at, some industry not doing that well, when you look at investment, your space is doing very well, actually, Amrit. And I think it's important to highlight that. But then the second question is, I get asked often by insurers is, how do we mix external data sources when we start looking at this new world of decision intelligence with our historical data? We love our historical data, but we need to deal with those new emerging risks. So how do you address that problem around data to make better decisions?
Yeah, another fantastic question. Something that I always found my job when I was an actuary really fascinating, right? Because I often, when I try to explain it, if you're an actuary, you have this like really awkward situation at parties. If you're an actuary, you don't go to that many parties, but the ones I did go to, right? You have this awkward situation where you have to explain what you do. And one of the things that I think a lot about the way I did my job as a pricing actuary is really my task was to understand the world of the risk being priced better. Right? That was my job. Like, our job is to apply a framework to understand a risk and then set up the risk-bearing structures on top of that make the best sense for the customer, are the fairest, are the right price, are competitive in a marketplace. And so really the job of a pricing actuary, or the job of a pricing team, underwriter and actuary huddling together, or data scientists in this day and age, is really to understand that risk the best way possible. And I think when you think about pricing as that problem, the historical data is really important. Right, but you said something, Sabine, about the dynamism of the world. The world's never changed faster, right? That's the thing about exponential growth, right? It's never changed faster. The historical data is really important, but it's not the be-all and end-all. And if you look at risks like cyber, for example, right, the past isn't meaningfully a guide to the future for these emerging risks in the same way, actually, that it has been for maybe a more established, if you think about like a fire risk, or something, a classical fire risk for a more traditional line of business. One of our investors, we're very fortunate, the founder of Guidewire, most people know who Guidewire is, Marcus Ryu, is now a venture capital investor. He's at Battery. He used this really lovely phrase when he invested in us. It's like, actually pulling the signals out of the noise in a world that is never, has meaningfully different from the past. The future is meaningfully different from the past. Is a hard challenge, and that's what we do. So when I look at these risks, actually, it doesn't faze me that we don't have a lot of historical data. In fact, quite the opposite is true for these very large risks. Like, if you're looking at cyber, if you're looking at climate risk, you're looking at emerging technologies, the science applied to those risks is much richer. Right? They're actually much more, because they're new, the people analyzing those risks have a much more data first mindset than many of the other more classical fields. And as a result, actually, if you know where to look, if you're able to be partnerial with your clients, you can analyze those risks in a much more richer way. It's not the same historical data, because you're right, you don't have the claims, but you have a richer landscape of data. If you're thinking about battery technology, for example, right? Like, the science and technology underlying the way batteries are being used has never been more analytical, right? And don't get me wrong, I think our industry has a much more work to do to create the right incentives so that data is shared. But the best way to do that is to use it to price risks more fairly.
Yeah.
I'm pretty sure if our clients knew that we could synthesize all the data from an Apple Watch, right, to price their life insurance, they'd be much more willing to share it than if they didn't. And I think that's where hopefully HX can come in. If we do our jobs really well, then people will want to share that data because they'll get fairer risks. And in a competitive landscape, the best thing you can do is increase the amount of information to make the decisions, because that's how markets become fairer, become more effective, become more efficient. So yeah, I'm optimistic about it.
Yeah, I love what you are saying, because we have been talking about data standards in the past. We have seen, open finance. We often talk about, are we going to have open insurance at some point? But this is still, I guess, in progress. And when we look at our industry, still a lot of things are very siloed. But then, I'm so excited that I will be able to see you at ITC Vegas 2024 on the 15th of October, just in a few days' time. And you already have talked about some of the major themes we are going to see there. Climate resilience, which is going to be a major theme at ITC, cybersecurity for small and medium enterprises, where there's still a major gap, right? We have a major protection gap for small businesses. How does pricing, decision intelligence plays across all those emerging risks that we are going to start tackling at the conference? And what are you excited to hear, to listen to, the conversation you are looking forward to having when you are going to be there at ITC on the 15th of October?
Yeah, so I think, super excited for ITC. You can sense the British accent from me, but I'm actually calling from our New York office. I'm spending a month in America now. It's super exciting. We raise money from from our friends at Highland in Europe, but also two of the world's leading investors, Battery Ventures and Andreessen Horowitz. We're increasingly an international business, increasingly a US, an American business too. So very excited to spend more time here, excited to get out to Vegas for my first ITC. So what would I say? I'd say thinking about the themes of ITC and how it addresses those challenges. So I think we're seeing an exploding data landscape in all of these areas, in the climate space, in the cyber space, in particular. The way these classes are being underwritten is kind of begetting a huge landscape of data. And if you look at some of the leading MGAs out there who are underwriting these risks in a new way, they're capturing data in they're capturing entirely new data sets, and they're analyzing it in a 21st century way. We're super excited to be part of that conversation. We're probably, almost certainly the leading platform to synthesize that data and convert it into insights and decisions for the purpose of pricing. So one of the things we see from our clients, and a challenge they face, is it's like, in order for our clients to narrow that protection gap, they need to be able to synthesize this data better. Right? You can't take the data that all of these modern industries, these modern class of business have, and whack it in a spreadsheet. You can't do that. Right? What you need to be able to do is synthesize it at speed with a variety of modern techniques and do that much better. And whether you're an incumbent insurer or an emerging one, we want to be the partner for every single one of those people solving these super hard challenges. So to answer your question as it pertains to ITC, we're super excited to meet new technology partners. We always, that's what we do. We kind of pioneered this 5 or 6 years ago, HX Connect, the ecosystem of pluggable data sources, analytical tools into our platform. We did this when we were very small, and we've got a rapidly growing set of integration partners. And that includes some of the big ones now, the likes of Guidewire, as well as the smaller data providers. And the other thing that we're super excited to do is speak to clients, right? Like, one of the most important things you can do as a provider of technology is listen to your clients' problems. They're changing very quickly. AI is transforming the way some of those data silos are being attacked. People are often talking about data AI in respect of data ingestion, but it's also solving the data mapping, the data flow problem. We're applying that very deeply inside HX right now to make our clients' data silo, to break some of those data silos. So super interested to hear the challenges that our clients are facing. Ultimately, we build infrastructure, right? That's what we do. We don't build pricing models. Our clients build models on top of our infrastructure. So hearing about the challenges that our clients are facing when they build those tools, or how we best build the right infrastructure for them. So those are the two key themes. Lots of new challenges from clients, and also meeting new providers.
So one things we need to highlight as we are discussing here, Amrit, is you have amazing clients in the United Kingdom, and some of those clients are also working with you in the United States. So, when I go into your website, I see Aviva, Conduit Re, Aegis, London, SGI, among so many others you are working with. And the UK is different from the United States. So can you explain how you are addressing those differences, taking advantage of the 35 or 45 billion of GWP you're already transacting and bringing the really best of change to the United States, which is highly regulated and state-based regulated? Tell us a bit more about that.
Yeah, fantastic questions. These are really, really great questions. So I'd say, $45 billion and counting. Hopefully it'll be close to double that in the next couple of years. So, the $100 billion mark is the one that's super exciting for us. $0.1 trillion is not a small number. So what would we say here? One of the beautiful things about insurance, and probably one of the formative kind of learning proving grounds for us early on, is that insurance companies are multinational very, very early. Right, because insurance companies, the benefits of diversification as in an industry make insurance companies naturally want to be big. They become geographically diverse quickly, and so while it's true we're a British company and that we've got some of the world's leading insurers in Britain on our platform, on our website, we've got some of the biggest insurers in America. On our platform too. The marketing restrictions about talking about them is a little bit harder for us, but most people know who they are. Some of the world's biggest insurers anywhere are headquartered in the US, and many of them use our platform. More than 30% of our revenue comes from America already. One of our clients has more than $5 billion of premium and 2,500 users pricing and rating risk on our platform every day, all across North America. And what that allows us to do is to really see the differences between how things are done inside a company that underwrites both European and British risk and North American risk. And that's been a huge benefit for us because we're able to see actually the kind of different ways they go about it, how important the admitted side of the business is, actually the difference with respect to pricing and rating, right? Actually, how much latitude you have to flex your rates is very, very different in North America compared to how much latitude you have to flex them in the UK. And that influences how we design the models with our clients. It influences the investments we make in the post-bind process, the post-analysis process with respect to filing of rates, and also the effort and energy that needs to be put into for explaining why a price is what it is. Right. The beauty of building a platform like ours is because it's extremely general, it can be used to solve all these different challenges at once as part of the process. In the UK, we tend to bundle up clearance, triage, rating, pricing, filing, maybe less the filing side. We don't do that, but like post-bind administration, post-bind execution. We lump all of these things together in pricing. I've seen in the US, these are like very different like parts of a workflow. And we're really investing at the moment at speed, again, having the benefit of the investor base, the experience base that we do with Marcus Ryu from Battery and Angela Strange from Andreessen Horowitz. We're really focusing a lot at the moment on building out that richness of componentry that's much more tailored to the US specific challenges that I outlined there. They're coming thick and fast. Many of our clients are doing it already, and there's much, much more product work that we're doing here. We are our leader of product, so the intersection of business challenge and technology is based in New York. So we've got a lot of American expertise, and it's only growing in the business already.
So much looking forward to meeting the team at the conference, and lovely to hear that you also spend a lot of time with Angela Strand. We admire Angela at A16Z, and followed her and listened to a lot of talks because she's the one who actually went into InsurTech and observed our market as well, which I'm sure she would love. This question I'm going to ask of you is, we talk a lot about artificial intelligence, and we know we are going to talk about AI a lot at ITC Vegas, and I'm sure a lot of the attendees, whether they are partners or insurers, chief underwriters, actuaries, will want to ask you that question. How do we ensure that we use AI in a trustworthy, responsible, and ethical way when we look at all the development we are seeing with generative AI?
Yeah, it's a great question. It's a super hard question to answer. I'm really optimistic about this. Insurance is a huge judgment-based game, right? If you want to look at it through a game theoretic or a game structured lens, there's a huge amount of judgment there that factors in, even in the risks that are very homogenized, very straight through algorithmically driven, judgment in selection of final rates is a really, really key thing to do. And I think one of the things that people are probably ignoring a little bit in the AI space is it's wonderful for productivity, right? It's been an amazing thing. Like most scientific and technical revolutions do a huge driver in productivity. The idea that you can ask a robot to ingest unstructured PowerPoint photo spreadsheet, this was like complete magic even 2 years ago, right? And now it's par for the course. People are frustrated if it's not 99% accurate. The idea that it's anything more than 10% accurate isn't mind-blowing anymore. That's the technology for you. But I think there's two things. I think one of the other sides of AI is how it provides a framework for reasoning. The idea that you could ask a model, say, tell me why you think this risk is a good thing, and it will play its rationale through. You could ask an AI-based LLM, say, like, I'm going to give you some information about this risk. I'm going to give you some features about it. Can you tell me why you think this risk is good or bad? And actually, I think what we're going to find is like mechanisms by which we can enrich our own judgment and decision making through interaction with models is something I'm really excited about. I think you need a framework to reason about risk. You need to build a framework for operationalizing that reasoning. I'm a bit biased. I think we have the best one out there. And so we're very excited about this. With respect to the question about how we can make sure, look, I think there's a huge amount of work that needs to be done in alignment and safety and insurance specifically. I think insurance is a very specific kind of field of AI where actually, AI applied to insurance is a very specific field that needs its own dedicated attention. I think insurance companies could come together. I think they should be working with technology providers. We're definitely going to do that. Our investors are investors in OpenAI. That's cool, right? Like they know this sector. I'd hope we can add something back here. We're investing very heavily in it ourselves. Virtual agents in the underwriting and actuary space are very interesting to us. We've been talking about that. We announced that at HX Live a little while ago, our first conference. We're going to be investing a lot in this space. We've got the best partners in our clients and our investors to hopefully bridge the gap. And I think this is an area where I think we can contribute directly to helping build a framework for people to think about these challenges that people face around risk, judgment, decision making.
I so much agree. And, I often said to organization that it takes years to build, AI model and generative AI models. It didn't start in November 2022. And many insurers, right, are working with OpenAI, trying to understand what that means for their business, at least in pilot phase, right? Not in production, but everybody needs to be curious to really understand how this is going to change the world. So a fun question, I hope. Let's look at the future lens, Amrit. What do you think we need to start thinking about as new emerging risk, right? I am excited about space tech. As you know, there's a lot of investment going into that field. You mentioned battery, and actually I heard quite a few insurers talking about battery as an asset class. So anything exciting that we need to pay attention to?
God, what a big question. All of these sectors, every single one of them is an order of magnitude or 2 orders of magnitude more data driven than anything we've seen in the past. And in my mind, I think the most important thing, this is easy to say and really hard to do. I did some work when HX was much smaller with the Lloyd's lab, and we had this group called Pricing for Innovation. It was something we did very early when HX was 10 people working in a car park in Southeast London, different to today. But one of the things that we talked a huge amount. Oh, thank you. Yeah. A little bit different from the car park, which we remember very fondly. But the new offices are great. The thing that we thought a huge amount is getting the right incentives for actually the risks being priced to the providers of the risk, the carriers of the risk being priced to share with the carriers of the risk bearing the risk. Right. So setting up that incentive for that data to be shared between those two parties is one of the most important things to do. And I think, lots is talked about pricing it's a prickly space, but building transparency in how that data is going to lead to better outcomes for the client, I think is really important. You don't have to share every bit of your secret sauce to give clients and brokers much better insight as to actually how the data is being used. This is something that I think we could do much better as an industry. And I think, you talked a little bit about open banking, open insurance, and I know that's a controversial subject. I'm one of those people that sees the heterogeneity, the real mixed bag of data sets we see as insurance, making it markedly different from the kind of much more standardized profile of what we see required to complete a banking transaction. But I do think one of the things that was done really well there was the playback of the benefits to the customer. And if you look what happened there, how quickly now, lots of, I sent some money to someone in Kyrgyzstan. It's a really random thing that I had to do, but they used the open banking protocol to do that. That wouldn't have been possible,
Yeah.
A few years ago, to do that overnight, to go, I need to send this money urgently to someone. And I think one of the things that we could do as an industry much better when it comes to pricing frontier risks is go, actually, how are we actually going to make that better for the customer? Easy to say, hard to do. But again, I'm an optimist. It's early in this field. We're investing a lot in this with some of our flagship customers and thinking about what sits around the pricing process, not just the act of going, how much does it cost, right? And that intersects lots of things like explainability in the AI space and as well.
And so important, right, to drive that trust through transparency with the customer we want to serve. And actually, by creating that transparency, I think we drive retention and improve customer service. So my last question, where are we going to find you when we are going to ITC Vegas? I'm so excited. I will see you, Richard, Nidhi, and the team. But where can we find you?
Gosh, I don't know the answer to that. That's embarrassing, isn't it? We're definitely going to be in Vegas. I can find the booth out. I'll make sure when you post this that I do a link and go, sorry, Sabine, for not knowing exactly where we will be. But we will be there in force with lots of our team. I'm going to be there. I'm doing a talk on thinking about build versus buy decisions, particularly as they apply to AI and kind of emerging kind of infrastructure challenges. And so we're super excited to meet lots of people, and I'll make sure that that we share the appropriate links for this.
I'm sure that the team is watching, and I'm sure they are going to add this in the comment box. So sorry, I didn't mean to straddle you, but we'll add the in the comment box. So people, you will know exactly where to find the team at ITC Vegas.
Exactly. The good news is I've got a very competent team. So
indeed,
okay.
Indeed. An amazing team. So thank you so much for joining me. I cannot wait to see you just in the next few days. And people, if you want to meet the hyperexponential team, just check the comment below and reach out to the team, because they are listening now. And if you want to actually set up a meeting, they will help you out as well. So thank you so much for joining me, Amrit.
Thanks for having me, Sabine.